Hello and welcome to Dinis Guarda, Cities ABC Open Business Council series. We are here again to feature some of the global thought leaders and experts in different industries. And today I have the pleasure to introduce to our audience a project that I'm particularly excited, and I'm excited for multiple reasons. And welcome to the project, Mr. Douglas Borthwick, that is the Chief Marketing and Business Developing Officer of INX Services. Borthwick has over 25 years of experience in the finance industry, most recently founding and building the Chapdelaine FX electronic and voice trading business for an interdealer broker TP ICAP from 2012 to September 2018. And Douglas held various roles with Morgan Stanley from 1996 to through 2005, and managing foreign exchange derivatives trading products in New York and London with a strong focus in emerging markets. He then ran the strategical trading desk at Merrill Lynch from 2005 to 2006, and the Latin American FX trading business at Standard Chartered from 2006 to 2009. In 2010, Mr. Borthwick managed trading and research areas for startup foreign exchange Farus Trading, a company that was later sold to FXCM in 2013. And actually, I know some of the founders of FXCM. And Douglas Borthwick holds a Bachelor of Science and Economics from Carnegie Mellon University and an MBA from Yale University School of Management. And Douglas is behind the company. As a small introduction that I'm particularly bold. And I'm very interested as well because it's trying to create an exchange for securities, and we're going to be talking about that. And as well something that is very cutting edge, but at the same time super necessary for this emerging digital assets market that is right now exploding, especially in the last months, and it seems like being unstoppable. And as well creating something that is as well in consideration as well being already backed up by the CSE in the US, but is really impressive INX exchange and INX services. So Douglas, first of all, thank you for doing and being here. It's a pleasure to have you here.
Thank you very much for having me. It's great to be here.
So Douglas, I'll go straight away. So we have a fantastic trading and investment background. I would like to have a bit of introduction about that background. We went through a lot of different roles in major global houses and major trading and investment banks and some of the biggest leading organizations, but as well with the startup world. So a bit of your background on that areas.
You know, my background, Carnegie Mellon, as you said, I'm from Scotland initially, and Carnegie Mellon was the first sort of educational institution, then Yale University. At Yale, I ran into a guy called Richard Medley, and Richard was the guy that wrote the piece for George Soros that says that sterling should be devalued. And Richard actually got me into foreign exchange and introduced me to Morgan Stanley. And at Morgan Stanley, my job trading emerging markets started in Latin America, moved into Asia. But really, you know, we looked for countries that were weak or really over their skis, I guess would be the example. Countries that we thought really their currency was overvalued and would probably be devalued in the future. And, you know, I ran a number of trading desks there and was successful throughout Latin America and Asia in finding weakness and taking advantage of that. But throughout my career in foreign exchange, we always sort of looked at the US dollar as being the least of the dirty shirts. And yet over time, I realized that this least dirty shirt was actually filthy and that the US dollar in my mind was completely overvalued. And because it was so overvalued, it meant that you had to find a hard asset to buy against it, because you can't just buy the euro because the euro is a disaster too. And you can't buy the yen because Japan's a disaster. And so I looked for hard assets that are liquid. And real estate's not liquid, but one thing that was liquid is Bitcoin. And that sort of got me down the rabbit hole of crypto and got me into crypto. And then I heard through the grapevine that there was a gentleman in Israel, in Tel Aviv, called Shai Datika. And he'd gone to the SEC, you know, the governing body over securities in the US, and said, look, I've seen these ICOs and I think that they're illegal, but I'd like to do a legal ICO. In other words, he wanted to raise money for a pre-revenue company from the general public over the internet and do so with a US registered security and not a Reg A or a Reg D or a Reg S or Reg A plus, any of these securities with exemptions, but with a full US security. And I thought this was the most exciting thing I'd ever heard, because digital securities differ from regular securities because you can trade them all night long, 24 hours a day, 7 days a week in fractional terms. And that opens up now, it's sort of like a democratization of trading. Why are there people in the third world that can't trade US assets? Well, number one, they can't afford them. At $18 a share, the average share cost in the United States, sometimes that's someone's monthly salary. But if you can own Amazon fractional ownership, that makes sense. Why do people abroad have to always wake up to trade in the US? Why do US companies like the New York Stock Exchange and NASDAQ have opening and closing times? That was probably built when someone took a horse and cart in from New Jersey to trade on the floor of the New York Stock Exchange, had breakfast, read the paper before 9 o'clock, trading happened, then they left at 4 so they could get home to New Jersey again. The markets aren't like that anymore. News isn't a morning newspaper and an evening newspaper. News these days we get from Twitter. And Twitter's 24 hours a day, 7 days a week. Currencies trade 24 hours a day, 5 days a week, moving to 7, but crypto is 7 days a week. So there's really no excuse for why equities don't trade over that same kind of time period. And what we wanted to do is create a company where you could trade crypto, Bitcoin, Ethereum, and the like, and then switch over and trade security tokens or digital securities on a 24-hour-a-day basis. And that's what we're doing with INX.
Well, the vision is amazing, and I'm sure you have the team. You have the team and actually the back, at least the historic capacity to do it. So, can you tell us in a nutshell how you're trying to build this? So, what is INX, and what problems it solves? You partly answered to that, but a bit more in detail.
Well, when INX was formed, there were two investors that came along and joined Shai Datika, our CEO. One was Charlie Lee, who obviously is behind Litecoin, and the other one is Riccardo Spagni, who's behind Monero. So that's two of the top 5 cryptocurrency trading pairs that are involved in the INX vision and program. And what we wanted to do was raise money initially using a security token, and using that security token, which now has an ongoing IPO, we opened up a website and people can go on there and buy the first ever digital security. We're the first company to IPO on the blockchain. And the money we raised from that goes into us starting up our cryptocurrency trading company, which will open up next month. But on top of that, it also allowed us to buy another person in the field called Open Finance, which was a broker dealer in the United States in the digital space with FINRA assignation for digital securities as an ATS and broker dealer. So having that under our wing, along with the cryptocurrency trading platform, allows us for the first time to be an institution where you can trade Bitcoin and then start trading securities. And now we're going out there and finding all of the folks that want to move onto the digital blockchain. And this isn't something that I'm just making up. On his way out the door, the SEC chairman turned around Clayton and he said in a speech in Philadelphia, he said he can see all assets moving onto the blockchain. So think of that. There's $1.5 trillion market cap of blockchain securities today, mostly Bitcoin and Ethereum. But soon, if you move over $85 trillion worth of equities onto the blockchain, now you're looking at a real market, a huge market. And already the market cap for guys that are involved in just the blockchain experience, so let's say Coinbase, for example, are already at astronomical levels after only a couple of years in this business. So blockchain is not going away. And one thing that we did to really get blockchain to be important for regulators is we came up with AML KYC that was inherent on the blockchain in a smart contract and a security token. And what that means is for the first time, you can stamp out money laundering in the equity space. So for example, right now you could buy Nike stock, give it to your mother, she could sell it. She gets the money, Nike doesn't know and the government doesn't know, and that's money laundering. With digital securities, you can't do that. And you can't do that because when you buy a digital security, you whitelist the wallet that you accept the security into. And the security won't allow itself to trade to someone else's wallet unless they've also gone through a whitelisting. And this is a huge leap for United States regulators and something that they're definitely wanting to happen and move forward with.
Well, that's a fantastic vision, and I think, like you mentioned, is super necessary. It's necessary partly because a huge amount of the trading and the world trading right now is actually shifting away as well from the US. It's going much more to Asia. So being regulated by the SEC and all having that mission, that is fantastic. How you are right now trying to start building the pieces of this puzzle, and as well from a mission and from an offering perspective, how do you want to come up to the market?
Well, first I have to correct you in that the SEC doesn't regulate us. What we have is we have a registered security with the SEC. Our regulation comes for under the broker-dealer and the ATS license from FINRA. And that allows us to trade digital securities. And then when you want to trade cryptocurrencies in the United States, you have to have MT licenses or money transmitter licenses, which you get from each individual state. And so, there's different governing bodies that allow you to do all of the things that we want to do. Now, we already can trade with 25% of the US. We have the MT licenses for those states. And over the next couple of months, we'll onboard more states until in about a year and a quarter's time, we'll have every state. But on top of that, we can already start trading the security tokens today through the Open Finance acquisition that we did. And so we'll be the first ever public security that trades on a digital ATS for retail. And that's something we're really excited about. And that should happen, once we close our IPO that's ongoing right now in the US. The pieces of the jigsaw puzzle have already been put together. We just have to pull the trigger.
No, I think it's really important. So can you tell us, I think let's touch the regulation a bit more, because you touched a bit that, but I think it's very important, especially let's compare INX and, for instance, Coinbase. Mm-hmm. I think it's important for special people listening to us, because I understand the complexity and as well the simplicity of what you're trying to do as an end product, but it's amazing because in the end of the day, no one did all these bridges. So it's super ambitious. And I know that you have the team to make it, but I know that is not a simple thing. So I would like just to understand from a regulatory perspective, how you do this from US perspective, but for instance, internationally, how we do it, and as well, how you are putting this puzzle from the regulatory perspective. And for instance, I think it's interesting to look at Coinbase because it's the biggest by far, and you mentioned that, platform on this level.
Well, Coinbase for sure has the first mover advantage, but I sort of think of that the same as Palm Pilot did. Sometimes, or the same as Netscape did. Sometimes you can be first out the gate. It doesn't mean you're the best. So that's the first thing. Now, Coinbase, like us, has MT licenses, so they can trade cryptocurrency in different states in the United States. But what they don't have is a digital securities license. So they have a securities broker dealer and an ATS, an alternative trading system, but they don't have it for digital yet. And I'm sure they will. I'm sure in the future, ourselves, Kraken, Coinbase will all have all of the right regulations for trading in all of the different products, for trading in cryptocurrencies, in digital securities, and for the trading of futures and options, from the CFTC. So I think that in time, there'll be a number of different exchanges, but let's just look at the landscape today. Today, 0.5% of the United States, 0.5% has a digital wallet. That's it. And yet every single place like Coinbase, Kraken, or Gemini are bursting at the seams. Think of them as restaurants that right now are standing room only. The chefs are so busy they can barely breathe because so many people are coming into their front doors and saying, guys, we want to onboard, we want to sign up, we want to buy Bitcoin, we want to buy Ethereum, we want to get into crypto. Now we're opening up a new restaurant on the same street. In our restaurant, we're also going to offer cryptocurrency, but one thing we don't have is, well, one thing we have that they don't is bandwidth. We have the ability to onboard people quickly. We have the ability so that when Bitcoin goes up or Bitcoin goes down, you can onboard with us and our servers hopefully won't go down because the servers right now go down, it seems, at all the other shops. Now, when you have a cryptocurrency trading company and you have digital securities and security tokens, it adds another twist as well because, KYC AML becomes very, very important. And that's one difference between the US, let's say, and companies working outside the US in the crypto space. In that the Coinbases of the world, the Krakens, the INXs and the Geminis all take AML KYC very, very seriously. But on top of that, we also look at wallets before we onboard folks. If Bitcoin comes into the exchange, we have to make sure that it's coming from a clean wallet, or that the Bitcoin itself are clean, that they haven't come from, let's say, the Mt. Gox theft that happened many years ago. But we take regulation to a very extreme level in the United States, and it makes sense because we don't believe that the future for crypto is what folks always point to in the past. And in the past, if you thought about crypto, it was but you still get this from folks every now and again. They talk about how crypto is for drug dealers and it's for kidnappers. Well, I'll tell you something. If you were to go down to the end of your street to buy drugs, I'm guessing the guy doesn't take crypto. He takes probably Deutschmarks or US dollars or something like that. Certainly not crypto. And when you get a kidnapping, probably in US dollars as well. So this idea that crypto is just for drug dealers, I think, is something that was a 2017 trade. Now, 2017 was very different from today. In 2017, the guy telling you that Bitcoin was going to go to 20,000 was in his mother's basement, maybe had 20 followers on Twitter. And his average trade size was maybe what, $2,000. Today, the guy that's telling you crypto is going to 300,000 is probably JP Morgan or Goldman Sachs or Morgan Stanley. The largest trade size is $1.5 billion. And the folks that are talking about it include the richest man in the world and folks with hundreds of millions of followers. It's just a different day today than it was back then. And one of the big differences is companies like INX went to the regulators and said, let's shine a light on this space. Let's make sure that folks feel comfortable when they come in the door, that they're going through all the same procedures they would if they were buying equities, that they come through all the same procedures, and they also know that they're protected in a number of different ways. And I think that that's one of the most important things that INX has brought, is that when you want to learn about our company, it's not trust us, we'll do the best we can for you. There's a prospectus sitting at the Edgar database. You can read all about us. You can see how much we all make, who our advisors are, every in and out of our company. I think there's 160 odd pages on our prospectus that tell you about the things that can go wrong. Now, there's no other exchange that gives that sort of a description of things that can go wrong. In the old days, when you thought about crypto, you saw a rocket ship and a moon, and that's how crypto was sold. And we're telling people, you know what, there's a lot of risk involved in crypto. We certainly feel like it's the future, but you can't go in there with your eyes closed. The big difference between the US and I think abroad is probably the fact that regulation comes first in the United States.
Well, I think right now I would say that this is a bit all over the world, but it's, I think the point is, I think the United States is still leading a lot of these areas. But I want to go through one area that is particularly important for what you mentioned. So INX is led by an excellent team. You mentioned some of the people, but I would like to touch that, because I think in the end of the day, I think there's a lot of organizations trying to do similar things, but so far, very few people succeed in doing something with this ambition. So can you tell us a bit more overview about, you mentioned high-profile people from crypto, high-profile people from finance, but you have as well high-profile people from technology veterans. So can you just tell us about the team and main achievements? Because I think that's important for people listening to us, because of course they want to know how the hell you're going to do all of this, because it's not a simple thing what you're talking about.
That's fine. Yeah, I'd love to. So I already talked about some early investors. Let's talk about the management team. There's our CEO, Shai Datika. And Shai's background came from starting an interdealer broker in Israel called ILS Brokers that he ran for 10 years and then sold it. And then he started a B2C options company with around 3 million depository clients, and he sold that, and then he started INX. So, Shai knows how to onboard people. Our COO, Itay, his background was he was the CEO of Playtech in Israel. So he obviously knows how to onboard retail folks very, very quickly. There's obviously myself. I think I onboarded around 100 companies when I was at TPI Cap, corporations, large institutions to trade foreign exchange. I think that I've got a pretty good background for onboarding folks. There's Alan Silbert. Now, Alan Silbert may be a name you're familiar with in the crypto space, but this is actually Barry's brother. But Alan's background was he had a company called Bit Premier that he started on the site a number of years ago. He'd stood the first ever house, home. He sold a home for Bitcoin way back in the day. I think the house was in Bali, but he's had a background in cryptocurrency for quite some time. Maya Noor, who runs our product and our UI, our UX, which you can actually look at if you go to demo.trading.inx.co. She's been working with Shai for around 15 years. And then we've got Paz Diamant. Paz was the CTO over at eToroX, and he's our CTO now. And then we also have a guy called Jonathan Azarwal. Now, if you're in the blockchain space, you probably know Jonathan in Europe because he started a company called BSave. BSave was the first place you could take Bitcoin and you could lend it out or you could borrow against it. And he ended up selling that to Alex Mashinsky, and it became the company called Celsius. So that's sort of the management team. On the board, we've got guys like Tom Lewis. Tom was the CEO of Ameritrade. It's the largest US retail trading platform for equities. We've got David Wield. David was the founder of the Jobs Act, but also vice chairman of NASDAQ. And Nick Thedany. Nick's background was he was the CEO of the TSXV in Toronto. So we've got folks that have come from either the crypto, blockchain world. We've got guys that have come from the legacy world, but not sort of like middle market players, but top of their game players. And at the same time, we've got the support of a considerable amount of folks in the crypto community. And so I think a lot of guys that have come at this before have either come from just one side, as in legacy finance, and haven't understood crypto, or they've come from just the crypto side, the technology side, and haven't ever thought about, regulation. And what we've done, or what Shai's really done, is he married together the two sides. I managed to get guys on the top of their game in blockchain together with guys on the top of their game on the legacy side to create what we believe to be a winning team.
Congratulations. It's really an impressive team. So can you tell us about the roadmap? Because I think it's very important. Let's say if I'm listening to you guys, and I think people that will listen to this interview, what is the goals that you have for 2020, 2021? Because what you're trying to do is as ambitious as NASDAQ or more. So I want to understand this roadmap, and as well how people can start engaging with you guys.
Yeah, so I'll give you the roadmap, but there's only so much I can reveal here. We're a public company in the United States.
Top level. Yeah, I understand.
So within the next couple of weeks, we'll go live with the crypto trading platform. So this is something that we've been working on for about 3 years. We put around $7+ million into the technology, built it all ourselves. We haven't licensed it from anyone else. It's all built on our own feet. That'll go live and open up for folks. Probably it'll go live in April and probably open up to the world around the end of April. So we're very excited about that. Around the same time, because we bought Open Finance, we'll be opening up the security token trading business. That security token trading business, we're going to probably adjust the UI a little bit to make it more user-friendly in line with how we see the INX way that we want to be seen in the world. But at some point, you'll be able to be trading crypto and trading Bitcoin versus the dollar or versus Ethereum, and then click on a tab and start trading security tokens. And all of these platforms will be open 24 hours, 7 days a week. And whether you want to trade crypto or digital security, you'll be able to do so on our platform. So very exciting. I think by the end of 2022, hopefully we've onboarded a heck of a lot of folks. And it'll be a seamless migration from one side to the other. And you go through KYC, AML on one side, and you can trade on the other platform as well. We'll passport in token holders too. Because once you own a token, we know that you've gone through AML and KYC, and that can act as a passport to onboard you onto our different platforms. Now, what about security tokens? Security tokens are going to be huge. And people don't really realize this yet, but I'm talking to guys that are already listed on exchanges in the United States, and I'm talking to them about moving them over to list digitally. I'm talking to guys that are private companies that are now looking for liquidity and want to list digitally. I'm talking to celebrities, big time celebrities that have music catalogs or have film rights that they want to now tokenize and then list on our platform. And that's the sort of thing that are going to get people interested. I think that in the past, security tokens have been, real estate deals, which are exciting to an extent, but maybe you onboard maybe 1,000 people because they were only limited to accredited investors. And that's been the big limitation. That's why you've seen some platforms that seem to do a lot of trading, but that trading is limited to maybe $1 million a day in volume. And it's because they haven't really onboarded a lot of folks outside of accredited investors. Now, the security token that we invented, this INX token, allows retail to trade it for the first time with no lockup periods. And so for the first time, we can start listing security tokens that retail can buy and sell back and forth all day long. And that's going to be really exciting. It's going to be exciting when a pop star says, here's my music catalog. I want to sell that to the world. And they send out a tweet and say, go to this website. And folks go to the website, and there they can buy a fractional ownership of that music catalog. Now, let's say you've got 300 million followers. 30 million followers start clogging the phones. If you want to see a middle-aged man pick up the phone and open up an e-wallet quickly, get Taylor Swift's music catalog and have your daughter, who's 13 to 17 years old, screaming in your ear, Daddy, I want to own this. And you'll find out that everyone suddenly opens up an e-wallet for the first time to make sure that their daughter has that ownership of music catalogs. In the past, when I was a child, and probably when you were, it was exciting to have CDs that belonged to our musicians that we liked. And I think going forward, we're all going to be excited to own a fractional ownership of their music. And it's in the artists, it's in their interest to allow that to happen, because then when you're an owner of someone's music rights, you're going to be calling up the radio station all the time saying, hey guys, play this music more. Why? Because your ownership will go up in price the more it's played. And that's the exciting thing about selling things to your fans if you're a celebrity. And that's just one of the ways you can use security tokens. But there are so many different ways. You don't also have to have, these days, people think about equity and they say, well, it's ownership in a company. But a security token doesn't have to be ownership in a company. It could be, as it is with the INX token, where you get 40% of our profits going forward. Now, why would you want that? Well, you'd want it because I can't produce any more security tokens that give that 40%. It's limited. With equity, what you normally find is, the stock goes up in price and the company issues more equity. Stock goes up, they issue more equity. After 10 years, you find that your ownership has been diluted down so much, it's sort of like, why are you there? With security tokens, you can set a limited number of tokens that receive that whatever you want to give them. And that's really cool. But on top of that, you can also then make it such that you can be used as a utility. So for us, you can take our security token, that INX token, and you can use it to pay your bills on the INX securities platform. So instead of paying $1,000, maybe you'd buy $800 of INX in the market and use that to pay and get a discount. That's important because then INX comes out of the market, so there's fewer tokens in the market, receiving that 40% payout. And then the payout isn't just in dollars, it could also be in Ethereum, which is also a new concept. In fact, we're the first ever US security that accepts in an IPO Bitcoin, Ethereum, and USDC along with US dollars. And so we really are bringing crypto to mainstream in terms of, if mainstream is defined as the SEC and registered securities, we're certainly doing that with INX.
It's really impressive, and I think my question is when, because I think it will be useful, I think, for everyone. But let me ask you one question on the security tokens, because I think that in itself, it's $1 trillion business. Mm-hmm. Because if you look at security tokens, you can mostly, I think every stock will become a security token in the future, but that is a bigger discussion. But my main question is, at the moment, very few, there's almost no really solid security token exchange in the world. Just that in itself, it's a massive market. So how do you want to tackle that? Especially because, for instance, you have property tokens, you can have, like you mentioned, NFTs and a lot of different things, but as well, there's a need just for instance, I'm working with a couple of security tokens myself, and they have to register in decentralized exchanges. This is the paradox. And a lot of these decentralized exchanges, as you know, have a lot of risks because, of course, of hacking and because of a lot of things, but they have liquidity. And as well, all the biggest crypto exchanges in the world are decentralized, in some cases, not very regulated or not regulated in some cases, or at least linear with probably the exception of Coinbase. So can you tell us about how you're going to build that vertical? Because that's massive. I think it's probably the most urgent thing on the digital assets world.
Well, I think that there's a lot of utility tokens that trade on large exchanges right now, crypto exchanges, that the SEC would probably look at as not being utility tokens and rather securities. So I think that that's sort of, there will be a delineation at some point, and in some point in the future, regulators will come knocking and say, why did you list this if you're not a registered broker dealer for digital assets? That's the first, and you've already seen that with XRP, where XRP was trading on a number of exchanges, but unfortunately the SEC didn't see it as a currency, it saw it as a security. INX saw it as a security back in 2018. When we first filed our prospectus with the SEC, we listed all the cryptocurrencies that existed, and we didn't list XRP because we saw it as a security at the time. So I don't think it's a surprise to the market that there are some things that trade as cryptocurrency that are actually probably securities. That's the first thing. I think that second of all, in order to make it $1 trillion market, you've got to let retail trade it. You have to let retail trade securities. Now, we saw that back in 2018 when we put in our prospectus to the SEC, but we had to create the actual security for retail because it didn't exist before that. It was just securities for accredited investors. And you can't create a big liquid market unless you have millions of people, which, as you said, is why people are going to these decentralized exchanges, because there's millions of people there. You got to bring the audience in order to have folks listing. Now, we solved that because we've got the cryptocurrency trading platform that'll attract the millions of people. And then we can say, hey guys, look at these security tokens. So we can bring the audience to the product. And I think that that's really important. But you'll also find that decentralized exchanges, while popular today, I think they'll start getting pushed out to the netherworld. Because I think at some point, regulators are very, very not comfortable with folks that aren't going through KYC AML. And the issue with decentralized exchanges are, it's a little bit loose. It's a little bit loose in those types of exchanges. Now, one thing you'll find is that when you do have a security token and there's liquidity, you want to attract institutions. And the institutions do most of the trading of securities today, not the retail guy. And the institution isn't going to onboard with a decentralized exchange. They're going to onboard with regulated exchanges. Now, why haven't they done that before? Well, it's because there hasn't been the audience and there hasn't been the product. You know, some of the security token platforms in the United States only issue four listings, and that's just not enough. You've got to list a lot more than 4. You got to list 50 or 100. And so my job over the next year is to go out there and get as many listings as possible. Now, you're right. There's guys in Liechtenstein that are way ahead of the curve when it comes to security tokens. And in Germany and Singapore, Hong Kong, all around the world is security token operations. But at the same time, they all lack liquidity. So the question then is, how do you take something that's licensed in Liechtenstein and make it so that I can list it in the United States? Now, if it was an equity, you do an ADR, right? You take the Liechtenstein property, you then sit it in a depository, and then you'd issue an ADR in the United States. Now, digital ADRs don't exist today. And so we're working with law firms all around the world, including Hassan's in Gibraltar. And what these guys are doing is they're trying to create for us a digital way for us to take something that's registered in Liechtenstein and make it available to a registered exchange in the United States. And I think that once we figure out those passporting abilities to take digital securities, because this was always sort of, what digital securities offered. It was the ability to list on multiple exchanges around the world at once. That's what digital's for, right? So you can reach all these different audiences. And so we're figuring out this as we go along because no one's ever tackled this before. No one's thought of it before. But I must have 30 or 40 companies all around the world that want to list on our exchange that aren't in the US, that didn't do a Reg A or a Reg S or a Reg D, and that aren't listed as a US public security. So what do? I don't know. The Canadians have a really interesting thing. They have the TSXB, the Toronto Stock Exchange, something called CPCs. And these are mini shells. They're almost like SPACs in the US, but they're very, very small. So maybe you create CPCs that trade in a Reg A format or Reg S format in the United States, and a foreign issuer that's issued a security token buys that. It does a reverse takeover of that and then lists its security token in the US under US registration. So there's lots of different ways that we're looking at, and I know we're going to find the way. And when we do, then we'll be able to list that real estate in Germany, that company that's in the United Kingdom, the new offering that just came out in Singapore or Hong Kong. And when we can do that, that's when you're going to see an absolute explosion of interest in these products.
Yeah, completely. I think one of the questions I want to ask that, and I ask that as well, because as you know, I've been involved in the crypto space for a long time, although I've been always trying to make the bridge between like you mentioned, regulated and non-regulated. Mm-hmm. So there's at the moment an explosion in terms of special DeFi, but there's as well a big demand. I mentioned a couple of, for instance, keeping on the security. I think the biggest challenge that a lot of people want to go and do something in a security exchange, but there's no security exchange. And there's no liquidity in the few ones that exist. And actually the few ones that exist are very, very small. So are you guys going to have something concrete, let's say for all these tokens? There's a lot of security tokens in the world that are desperate to get an exchange like yours, especially with credibility, footprint, and so forth. Mm-hmm.
Well, we absolutely have plans, but we haven't put out PR on them yet. So I'm restricted from telling you and your listeners.
No worries.
But it's all about audience. You build the audience and then security tokens will come. But you've got to have an audience. You can't have 5,000 accredited investors and say that's an audience. You've got to have millions of people and say that's an audience. And we're going to attract millions of people to our platform to trade crypto. And then we're going to introduce them to security tokens, or we're going to list security tokens that attract millions of people just on the basis of who they are and what they are. And that's going to be through, obviously, tokenizing celebrities, cash flows. And doing something like that attracts folks that normally wouldn't be attracted to that type of, this type of area. You've seen how, you know, NFTs are trading these days, and it's sort of like, you know, if you list the right NFT, you can find folks suddenly sign up to buy it. Now, NFTs are going to trade differently than security tokens because it's obviously you buy it once. So it's more like an eBay that you'd have to set up to sell NFTs. And NFTs, I also am not that excited about on a regulatory front because who actually owns it? When you send out a tweet, who owns the tweet? You or Twitter? You can't answer that question. Jack can sell his tweet because he owns Twitter. But anyone that thinks that they can sell their own tweet has to really talk to a property lawyer and find out if they actually own it to sell it. And I think there's a lot of questions still about the legality of who owns something before they sell it in the digital space.
No, I think it's a bigger. I will take that to the bigger one because, of course, I think the NFTs at the moment is more collectives than art. So bear in mind that part. Actually, the NFTs is one of the questions I have here. So at the moment, we are in a completely crazy and watershed moment in terms of NFTs, especially in the area of growth in the art, where it passed 260 million right now with people last week. And the 2,800 growth. And I understand there's a lot of things about the NFT because there's the NFT ownership of a piece of art, but then there's the collectives and there's all the different things that are right now coming. So how are you planning to look at this in terms of INX and as well the relationship, like you mentioned, from the regulatory, non-regulatory part of the NFT? Because the idea of the NFT is just having a digital collective with a proof of identity that is on the blockchain.
Well, what I would say is this: we'll never list anything unless we have regulatory approval to list it. So there's a lot of things that come out that are the flavor of the month, flavor of the week. But a lot of times when they come out, there's absolutely no protection for the retail investor. And I think that one thing that we take very seriously is those protections. And knowing that if someone buys something that they are allowed to buy it, number one, and also that they understand the risks involved with purchasing that good over our exchange. And so NFTs, you won't see us listing them until we get from a regulatory basis, this is what you can do with NFTs. And I don't see that happening for at least another 18 months. So I think that right now it's a very exciting flavor. And remember, if you'd asked me this question 2 months ago, we'd all have said, what's an NFT? So you're right, it's very exciting today. It's a great flavor. There's a lot of interest in it. But again, as you said, what the market cap's 260 million. Equities is 85 trillion. So for me, it's a lot more interesting to start listing, let's say Nike, or let's start listing Cisco, or start listing Tesla in tokenized format on my exchange, because that's going to get a lot more interest than an NFT will.
Well, but I think the point as well is actually picking one vertical until you build the big house. And I'll leave that for you guys, but I think I'm interested as well because the ambition is fantastic. So
I'd love to be a warehouse that you can come to. I think of it as a shopping mall, right? I'd love to have a shopping mall that folks can come in the door. They can buy their crypto, some NFTs, they can buy security tokens, they could buy some options. But right now, the NFT side hasn't gone through regulatory discussion. And so because we're a very highly regulated exchange, and that's what we lead with, I don't see as sort of taking a flavor of the month because maybe I can make, you know, an extra $50 today because I sell something. That's not the way that we're going to be doing business. We're in the business of having high regulation as opposed to going after the profit first and then talk to the regulators after. Because there's lots of folks that have done that. I think if you look at one of the risk factors for the Coinbase IPO, I think one of the things they talked about there is, you know, they listed XRP and they may be in trouble for that. They're sort of like, I don't think it makes sense to have the regulators in the rear view mirror where you're kind of running away from them because you were after a quick buck. I'd much rather work with the regulator in the passenger seat.
No, it's wise. But of course, the velocity of things are very big right now. So you wrote an article or actually you commented recently on the media about one important area that is from crypto to tokens, the great migration. I'm particularly interested in this because that's what you're talking about, but as well, like you mentioned before, crypto at its moment right now, but it's the tokens that counts, especially as ways of digitizing society. Can you elaborate a bit more on this?
Sure. You know, if you look at the blockchain assets that are traded today, mostly made up of Bitcoin, Ethereum, it's $1.5 trillion. Now that changes up and down based upon where Bitcoin's trading, but that's around where it is, $1.5 trillion. If you look at the size of equities, 85 trillion. Equities is a lot bigger. It's a lot bigger. And you look at fixed income, maybe 100 trillion. That's also big. $6 trillion just for foreign exchange. I think what we'll find soon is you'll find people won't trade foreign exchange, they'll trade stable coins. They'll trade the dollar stable coin, the yen stable coin, a euro stable coin, a sterling stable coin. And all of these will come into the fro probably in the next 2 or 3 years. And so then that'll start to dwarf what we know as being the big market, which is Bitcoin and Ethereum. Then on top of that, as you see equities move onto the blockchain, and it'll probably start low first, it'll probably be the guys that are trading on the OTC. And the OTC, I think, has 10,000 companies in the United States, and they'll put their hands up and say, look, we want to have more attention. We'd like to trade on the blockchain. It's novel for us, it's exciting. It's sort of like in the .com days when every company thought about adding .com to the end of their name because it meant that they would see a bump in their stock value. And I think you see a lot of guys move from the OTC into this new digital realm. And as they start to do that, you'll see guys on NASDAQ that'll turn around and say, you know what, maybe I'll take 10% of my float. I'll do a stock buyback, 10% of it, and I'll stick that into a trust, and then I'll have that trust trade in tokenized form on the digital exchange, because there's folks around the world that want to own Nike or Cisco or Amazon. And so that'll, first you dip your toe and then you get deeper and deeper until the regulators are really pushing down on you saying, guys, you got to do this. For AML, KYC reasons, you got to move on to the blockchain. And so, we've had discussions, I'd say, with most of the banks on Wall Street that are already setting this up and talking to boards about tokenization. And this isn't just something I'm making up. As I said, Clayton, who's the SEC commissioner, said in a speech in Philadelphia, you can see all assets moving onto the blockchain. Janet Yellen said the other day, and I think it was a Senate hearing, talked about how KYC AML is the most important thing in crypto. On top of that, you've had Jerome Powell make comments on AML KYC as well. So the US government is less concerned about Bitcoin and Ethereum. They're more concerned about the fact that if you're going to be trading these products and any digital product, that you go through KYC AML. And I think that because of that, you're going to have the regulators pushing down on issuers and saying, guys, you got to move on to the blockchain. And we're going to be one of the few guys that's sitting there with an exchange where you can actually trade them.
I think and I think, well, that's a fantastic vision. I'm really eager for that to happen and look at this. So we are wrapping up the interview and I want to be conscious of your time. So there's 3 questions still that I want to ask. So first one is, we touched Coinbase before. And of course, Coinbase is the dominant regulated cryptocurrency exchange in the world. And of course, it's having its IPO with, I think the value at the moment is around $100 billion. Mm-hmm. So how do you see this IPO? Because it will open doors for the likes of you and as well to mainstream, to create first of all, a better understanding of the industry by the conventional regulators and other things, but opening a lot of opportunities because Coinbase has been like the first one leading. And I think they've been leading as well, similar to your vision, not trying to go fast, being innovators, but always trying to keep as well good relationships with regulators, making the bridge. So how do you see this potential IPO as a way to, first of all, strengthen the industry, but as well create much more doors or open much more doors?
I don't know if it'll open more doors. I think that Coinbase is saying to the retail public, you weren't smart enough to invest in our early stage. You weren't rich enough to invest in our early stage in a Series A, Series B, Series C. You weren't a venture capital. You weren't private equity. But you can buy us when we're worth $100 billion. And what INX said was, look, we want retail to invest in us today, pre-revenue, before we even go and start trading. And so we had a different view. Our view was that the general public can come into INX today and invest today. And we were actually the first ever guys to IPO in the crypto space. We did it. We started our IPO back in August 24th of last year, and it's ongoing right now. And we also decided the blockchain's the future. So we decided to IPO on the blockchain directly, where you buy an ERC20 token. Coinbase is deciding to go the equity route. So we decided that building a community of retail investors in our company was very, very important. But also by doing it the way that we did it, it meant that there's now a pathway for everyone to move on to the blockchain and to start trading as a digital security. The way that Coinbase is doing it is sort of like they're letting the rich fat cats get out now at $100 billion valuation and moving the money from retail who will buy this IPO into the hands of the private equity and the VCs. Now, you got to ask yourself, is that really good for the industry, or is that good for the VCs and the private equity companies? And I think that the way that we're raising money means you don't have to go to the private equity or the VC. You can raise money directly from the general public before you even start trading. And I think that that's a great opportunity for folks that believe in the vision, believe in the product. Now, Coinbase is a behemoth, you're right, and they've done a lot of hard work. They've managed to get, was it 30 million folks interested in cryptocurrency all around the world that have opened up accounts with them. But at the same time, managing that growth is hard. I think you've seen it before when Bitcoin got gaps down or gaps higher. What happens? Well, the servers go down, and you try to go in there and you try to sell or buy, and you can't because, oh, I'm sorry, you missed the price, or the servers have gone down, or there's no bid offer spread. You just have a buy button or a sell button. And I think what we're trying to do is bring clarity to this, where you can see a bid offer spread. You can, hopefully be able to trade because we won't go down when things start going haywire, when things start moving, there's aggressive price moves. I think also that when you're the leader like Coinbase, you can go out with, very high prices for folks. I think it's 130 basis points when you go in and you buy something on Coinbase. I think our pricing would be maybe a tenth of that, maybe a little bit more than the tenth. But sort of like being the first mover got folks interested in crypto for sure. And I've been a Coinbase user for many years. But at the same time, just because there's one restaurant and people are used to it doesn't mean that there can't be more restaurants on the street. And I think that what Coinbase did is they had that first mover advantage. They got folks interested and excited, very much like a Netscape. But at the same time, are they going to be able to continue at the pace they have? I don't know. As more and more alternatives like INX come onto the scene that follow the same regulatory ruling, I believe that they're going to find out that there's competition. And certainly the first mover advantage wasn't great for Palm Pilot. It wasn't great for Netscape. It wasn't great for Betamax movies because VHS ended up winning that. And it wasn't even good for VHS because we moved to digital as soon as everyone moved to VHS. With technology, things change very, very quickly. And I urge folks to go out and Google, cell phone adoption in the United States. If you look at that, for the first 10 years from 1985 to 1995, nobody cared about cell phones. In fact, your mother probably told you, don't get that, you'll get brain cancer. Now I think there's 1.4 smartphones for every American. So I think they include iPads. But what that means is that folks get into technology very, very quickly, and the change happens overnight. If at only 0.5% adoption, or 0.5% of the United States having e-wallets right now, and and a market cap for blockchain securities or blockchain assets is only $1.5 trillion, and yet Coinbase is worth $100 billion. What do you think companies are going to be worth when we're looking at 5% of the United States with e-wallets? Because already Coinbase, Gemini, and the other companies are bursting at the seams. Bursting at the seams. Some of them put out tweets last week that said, guys, we can't onboard, we got to halt onboarding. Or we're raising the minimum investment that you can put onto the exchange. So they're bursting at the seams when only 0.5% adoption is sitting here. When you go from 0.5% to 0.6, that's a 20% move higher. I mean, they're already bursting at the seams at 0.5. Wait till you go to 0.6, 0.7, 1%, 2%, 5%, 10%. I think you understand where I'm going here in that it's going to be really hard to manage growth, because that's the hardest part in the crypto space right now is you've got so many people onboard to get through there so they can buy their first Bitcoin or their first Ethereum token. And so many people are trying to onboard that it's becoming a really hard thing to do. And so we're opening up a restaurant on the same street and we're saying, hey guys, we've got the bandwidth. We can take folks in today, well, in a couple of weeks' time. And we're excited for that. But certainly Coinbase led the field, but it doesn't mean they've got the best product.
Very good points. In terms of, especially in terms of right now, the next short term, you touched some of the things, but I think as a wrap up of the interview, and I think we touched a lot of different things. So for people and investors watching and listening to us, why they should come to the INX, especially in short term, there's the vision, but as well right now, how they can start engaging, how they can start getting into, and you do right now an IPO and the token. Can you tell us about that and as well where they can find more information?
Sure. Well, you can go to token.inx.co, and that's the website that you can go to buy security tokens in our company. And as I said, that's 40% of net operating cash flow go to the token holders. And that's a great way to learn about us as well, because there's a deck there that you can learn through, and also the prospectus that sits with the SEC. There's also links to that on that website. You can also join our Telegram channel, INX Community. That's INX Community. And going in there, you can shoot us any questions you have and we'll try to answer them as quickly as we can.
Thank you, Douglas. I think there's a lot of things that is really impressive, the list and the ambition. I sincerely, I want you guys to succeed because I'm one of the ones that want to be part of your community and be part as well of what you're trying to achieve. We're going to put all these links in the interview, and I'm sure there'll be much more things. Any last words for people listening to us, especially explaining a bit more the 40%? I think that's a very big thing. You touched it a bit, but I think why your token is going to work going forward, and a bit the roadmap for the token. I think that's just as a summary for finishing the interview.
I think that it's exciting for our community and every token holder, having an ownership in the future of the company, I think is important. You own 40% of any profits that we have. Now, why is that important? Well, I'll have, maybe 15, 20,000 people that buy this token that end up going out on Twitter, telling their friends to come and join us and come trade with us. And every time I list a security token, they'll go out there and they'll tell their friends about it. Getting the community involved from day one is very, very important. And to INX, creating a democratization is key to our success. And so we want token holders. We want lots of token holders. So there's lots of folks out there talking about us, thinking about us, bringing us new security tokens to list as well. It's very, very important. And I think the most important thing for folks to understand about crypto is, back when everyone started talking about Bitcoin, there was a very big piece of cheese sitting on exchanges that people could take nibbles out of. And everyone was buying little bits of Bitcoin, $1,000 here, $2,000 there. But the number of Bitcoin sitting on exchanges is getting smaller and smaller. I think a year ago it was maybe 3.5 million. Maybe today it's only 2.5 million. And as institutions come in and start buying $1 billion at a time or $100 million, they send, for every $100 million, maybe they send 2 or 3 lobbyists to Washington to talk about blockchain and why it's important we have digital securities and security tokens. And so the supply of Bitcoin on exchanges is going down every single day. In fact, by the time this interview airs, it's probably going down by 2-3%. And so there's folks out there buying the Bitcoin, which is why Bitcoin's obviously going up in price, and Ethereum as well. Ethereum, think of it as the gasoline that's used to move trains around on the Ethereum blockchain. And there's a lot of trains getting put on that Ethereum blockchain. So I think a lot of gas is going to get used there. Now, as a company, what we do is we hopefully allow folks to come in there and buy Bitcoin, buy Ethereum, sell it, trade it, do what they want to. And hopefully we'll be able to offer them security tokens as well in the types of projects that they're interested in and excited in.
Amazing. And I think it's really amazing. Actually, the 40% is quite a massive proposal. So I want to thank you, Douglas. We're going to put links for all of this. It's really exciting. And I just wish you a fantastic success for this, because it's really a big endeavor that I think can actually help everyone in the industry, but as well a greater potential from an investment perspective. Thank you so much.
Thank you very much. Thank you.
Thank you.